So I wanted to focus on the oil and gas index. Now remember, this index is up for 7 consecutive weeks and is on course to end positive now for the 8th straight week as well. Especially the OMCs have been in focus, most of them up at 52-week high levels. Like I was pointing out before the markets opened, that they are estimated to have made about 8 to 9 rupees a litre profit on petrol and diesel in Q1, on top of the healthy refining margins as domestic prices stay firm while the international prices have fallen down. And the data from ICICI Securities says that OMCs are estimated to have made a combined profit of about 22,000 odd crore rupees in the April to June quarter. There are fundraising plans that have been pushing these stocks. So you can look at IOC, HPCL and even BPCL, all of them up in trade in today's trading action. Even the upstream majors are also up in trade. Most of the constituents of the oil and gas index, barring slight losses which are being seen on Aegis Chemical, and most of them are in fact up in the green, led by IOC, Castrol, HPCL, IGL, GAIL and MGL as well. Avinash, your thoughts on the entire oil and gas pack and especially OMCs? What should be the investor strategy?
I think you're right, Sakshi, that oil marketing companies would continue to do well. I think the June quarter also would show a very strong kind of performance in terms of the gross refining margins. And I think what is important is that, softer crude prices have actually benefited all these companies. In fact, all these companies have now announced mega expansion plans. IOC has also announced a 54,000 crore expansion plan. Most of them have now, offered rights issues. So, the funding has also started in the right way. So clearly, I think the scenario for oil marketing companies, which was little, disturbed about 4 to 5 quarters back, is now back in action. And hopefully, if crude remains at softer levels, then I think you could expect a decent upside, because both automotive and aviation, two major pockets where oil marketing companies supply their products, the throughput has increased significantly. And I think this is going to continue at least for the next, 2 to 3 quarters. So oil marketing companies would be a better bet. Upstream companies like ONGC, or for that reason Reliance, I think one would have to take a slightly longer term call, because in the near term, higher crude prices, lower crude prices are not going to benefit ONGC, because their pricing is entirely dependent on how the crude price moves up. A higher crude price is beneficial, but a lower or a static crude price would mean that incremental profits for ONGC would be limited. So I think our bet would be on the OMC pack, IOC, BPCL, HPCL. All these three look pretty attractive from a short to medium term.
If you like the video, do like, comment, share and subscribe.